Alright, gang, it's your boy Nature, aka Nature. Alright, gang, so we're back for another video. Alright, in our last video, we talked about how to identify or how to use a moving average crossover to enter trades, okay, to enter potential trades, alright, and when to possibly get out of potential trades, okay. Whenever you see a moving average crossover, you know when to get in a trade, and whenever you see a moving average crossover again, you know when to get out of a trade. Alright, so in our next lesson, we're going to discuss how to use moving averages on a dynamic support and resistance level, okay? Because we only trade on our resistance and support levels, alright? So let's go, gang. It's your boy Nature, aka Nature, gang. Alright, so to start right now, so how to use a moving average as a dynamic support and resistance level. So another way to use moving average is to use them at dynamic support and resistance levels. We like to call them dynamic because it's not like you're trading a traditional horizontal support and resistance line. They are considered or they are constantly changing depending on recent price action. There are many forex traders out there who look at those moving averages as key support and resistances. These traders will buy when the price dips and test the moving averages or sell if the price rises and touch the moving average. So if the price dips, then it will and tests the moving average. Then they will buy when price dips and tests the moving average, and sell if price rises and touches the moving average. So let's look at the 15-minute chart of a GPUSD. Pop on the EMA to see the EMA with 50 EMA on a GPUSD 15-minute chart period. Let's see if it serves as a dynamic or support or resistance. So as you can see, this is a 50 EMA. Price bounces off the EMA each time. Alright, this is a double top pattern. Alright, when it made the double top pattern, once price bounces off the EMA, price will bounce off the EMA twice before heading back on a downtrend. Okay, it will bounce off of it twice before heading back down on a downtrend. Also, looking at this double top right here. Now, for the double top to be valid, the second candle must be slightly lower than the first candle. Okay, so let's just look on top of price bouncing off of resistance on a 50 EMA twice. It also made a double top pattern. So you have to look at the patterns that it makes on top of resistance, strong resistance and support levels. So it made a easy double top pattern. So if you look at the double top pattern, it's a double candlestick formation pattern. So let's look at the double top pattern. All right, images of a double top. So this is the image of a double top pattern right here. Oh, go back. The image of the double top pattern. As you can see, for this double top pattern to be valid, the second candlestick is slightly lower than the first candlestick. As you can see, the first one is slightly higher. For this second candlestick, for the double top pattern to be valid, it is a double top pattern. Okay, double top forms at the top of a resistance level, a strong resistance level. So it made a double top pattern. A double top is it rejects off of price rejects off of a strong resistance level twice, not once but twice, making a double top pattern. It's a clear bearish reversal pattern, a trend reversal pattern. Now you know that a downtrend is coming. So price finally drops down. Okay, this is the neckline. So it's same example right here as in this picture right here. I just wanted to show you guys this. Okay, this double top right here. It made the same exact picture. Then after that, price drops down. Okay, so it made a double top, also making another double top around here. Also, price made another double top, and then continue dropping back down. Okay, so this is another way to also see what price is doing. Price will make strong see what price is doing at strong resistance levels. Okay, so um, double top is a clear, downtrend, letting you know that a downtrend is occurring. So price bounces off the EMA each time. Okay, not once, not twice, but 4 times off the 50 EMA. So it looks like it's held really well. Every time price approaches the 50 EMA, it tests it and acts as a resistance. As price bounces down, amazing, huh? So it tests the 50 EMA and bounces back down. Okay, so it lets you know that it wants to every time price bounces off the 50 EMA, a strong resistance is at occur and pushes price back down. So one thing you should keep in mind is that these are just like your normal support and resistance lines. This means that price won't always bounce perfectly from the moving average. Sometimes it will go past it a little before heading back down in the trend direction. So there are also times when price will blast past it altogether. What some forex traders do is that they pop on 2 moving averages only on, and only buy or sell once the price is in the middle of the space between 2 moving averages, or once price makes a moving average crossover. Okay, you can call these areas of zone. So let's take another look at another 15-minute chart period on the GPUSD, but it's time. Let's see the 10 and the 20 EMA. So this is the 10 and the 20 EMA. Okay, let's see what price does. So price makes a moving crossover right here. So once you see the moving crossover, just let you know that price wants to drop. So once you see the moving crossover on the top of a resistance level, price lets you know that price wants to drop. And moving crossover, it lets you know when to enter and when to exit a trade. So when you see a moving crossover, that's when you know that a new trend direction is coming. And if it's at the top of you see a moving crossover, a moving average crossover at the top of a resistance level, it means that it lets you know that price wants to drop. Okay, so price drops every time. All right, so this is the enter zone. The 10 EMA is the blue line, and the 20 EMA is the red line. Notice how the 10 EMA is closer to what price is actually doing than the 20 EMA. How you read the moving average or the EMA, if the candles are below the EMA, the line, the 10 EMA, the 20 EMA, this lets you know it's a downtrend. If the candles are above the 20 or the 10 EMA, it lets you know it's an uptrend. So the candlesticks are below the 10 EMA, the 20 EMA, letting you know it's a downtrend. So this is a GPA USD on a 15-minute time minute chart for British pound and versus US dollars. So price is dropping. Let's see what other patterns, or we have the moving average crossover that lets you know that price wants to change direction. Because when you see a moving average crossover on the top of the uptrend, it lets you know that price wants to change direction and now go into a downtrend, no longer an uptrend. You see a moving average crossover on a downtrend, and lets you know that price wants to cross over and wants to head back up in an uptrend. So it's a moving average crossover was made on the top of an uptrend. It wasn't the current uptrend. Then a moving average came in effect, making it a downtrend. All right, so we can obviously see that. I would have got in right about here, okay, after I seen this candlestick pattern right here, this bearish engulfing, or this bearish Marbozo candlestick. It looks like a 3 inside down candlestick, as I showed y'all in the previous time. We even looks like we have even a shooting star right here. It looks like a shooting star right there. So yeah, I would have got in right after the moving average crossover, and we would just roll this down all the way down. And it looks like for like 1,000 pips, 800 pips, 500 pips. Okay, so that's how you trade the moving average crossover. Okay, on top of resistance level. So the moving average crossover is going to cross over at the top of resistance. Okay, and it's going to cross over. The moving average crossover is going to cross over at the bottom of the support level. Okay, so it's very, very important to understand. So from the chart above, you can see that the price went slightly past the 10 EMA, a few pips, but proceeded to after the crossover, drop afterwards. There are some traders who use the intraday strategies just like this. The idea is that it's just like the horizontal support and resistance areas. These moving averages should be treated like zones of areas of interest. These areas between moving averages can be considered the zone or support of the resistance. Okay, so breaking through dynamic support and resistance. Now that you know about moving average can potentially act as support and resistance, combining a couple of them, you can have yourself a nice little zone. But you should also know that that can break just like any support and resistance level. Okay, anything can happen in this market. Let's take another look at a 50 EMA on a GP USD 15-minute chart. Okay, so the moving average on the 50 EMA. Alright, so this one price started, it made a 3 inside down. Alright, pattern. This is a 3 inside down pattern. Now you know that price started to head down, plus all the candlesticks are below the 50 EMA line. Now you know that we're in a downtrend. Oh, on top of that, it made another double top pattern. Okay, on top of making a a 3 inside down pattern on the top of strong resistance level, and then all the candlesticks are below the 50 EMA, letting you know of all the candlesticks are below the EMA, lets you know we're still in a downtrend. Then we see a triple double top pattern, lets you know that we're still in a downtrend. Okay, then we come over here. This is when the moving average crossover comes. Okay, so it was resistance here, we have resistance here, okay, then eventually we have a break past the EMA. Eventually, this is what can happen. Price can reverse and break through. So this is what happens. Price eventually breaks through by making this, this could be a clear even star pattern, okay, morning star pattern. We can look at it in a morning star pattern. We do see this also is a bullish engulfing pattern, as the green candlestick is engulfing the previous candlestick. So once you see the bullish engulfing pattern, it looks like a morning star pattern too. Let me show you what a morning star pattern is. Okay, hold on, let's go back. A morning star in Forex. Okay, it also made a morning star pattern, one red candlestick followed by indecision, and a green candlestick, or a black candlestick followed by indecision in the market, and then a white candlestick. So it kind of made that's an even star. Okay, it's a morning star. Even morning stars are triple candlestick patterns that can usually find at the end of a trend. So it is at the end of a trend. You can usually find it at the end of a trend. So it looks like a morning star pattern. Also, it's a bullish engulfing pattern too. The wrong picture. Yeah, so it made a morning star pattern right here. This is a morning star right here. First candlestick. It's found at the end of the trend, and it made a morning star pattern or a bullish engulfing. As the second candlestick is a Morbozel candlestick. It's a bullish Morbozel candlestick or bullish engulfing candlestick pattern. This second candlestick is engulfing the second candlestick. Once we see that confirmation on a resistance, you buy at the support and you sell at the top. So we would have sold at the top, which we did, and we could have got in for a nice ride, a nice piff, and then once we seen this bullish engulfing pattern or this morning star pattern, triple candlestick patterns, we would have got in. So we buy at the bottom, there's support. So we bought at the bottom, price winds up opening at the bottom and winds up closing at the top. Okay, clear reversal pattern. So eventually we would have placed an entry once price crossed over or makes that breakout. Once price breaks out past the EMA, we would have been in a good profit if we had gotten it right around here, because price never goes back down this low ever again. Okay, it means another. This is a double top pattern right here. A double bottom pattern. This is a double top pattern right here. This is a double bottom pattern. I'll show you examples of that. So this is strong. This is support levels. So price never goes below this here ever again. We're all in profit. Okay, the whole time we're in profit. Okay, the whole time. So let's look at a double bottom, what this looks like right here. This is a double bottom pattern. Alright, so I just want to show you what that picture looks like, a double bottom pattern. It looks like real fast. So this is what a double bottom looks like. So double bottom pattern. So this is a double bottom, the first bottom, then you have the second bottom. Okay, makes a double bottom pattern. Right here, we have the first bottom, then your second bottom. When you see double bottom pattern, it means that price wants to. So bullish confirmation, meaning that price wants to head back up. When you see double bottom patterns, okay, means that the second bottom must be the first bottom. The second bottom must be slightly a little bit higher than the first bottom. Okay, so as you can see in this picture clearly. As you can see in this picture clearly, it did make a double bottom pattern, so it lets you know that right here and right here, and lets you know that price did continue back up after it made that double bottom pattern. Right here, it did also over here it made a hammer. As you can see, price is hammering out, and after that hammer pattern, price continued to go back up. So you want to read the candlestick pattern. Remember, candlesticks let you know what's going on as far as price action, as far as what's going on. So pay attention to the candlestick pattern. So those, those are double bottom, hammer. All right, so they're in bullish or morning star. So they're all, reversal patterns that let you know that price wants to continue heading back up. So we're in profit the whole time. Price never ever goes below the breakout where price broke out. So we're in profit the whole time for like about 1,000 pips, 800 pips, depending on your lot size. That could be about 3,000 to 4,000. Okay, that you just made. All right, so that's very, very important to understand. So in the chart above, we see that the 50 EMA held as a strong resistance level for a while on GPA, repeatedly bouncing off. It was resistance, it was bouncing off. Then, however, eventually in the red box, it finally broke up. We had gotten on an entry once the moving average crossed over. We had gotten for an entry. Price never ever goes below ever again. So we're always in profit. Price finally broke the red box. Price then retraces and tests the EMA again, which proves to be a strong support level. So once it tests the EMA, which it did, it starts to test it. Right here, it's testing it. We're still in profit because it never goes below that breakout. So the moving, so there you go, folks. The price then retests the 50 EMA again, which proves to be a strong support level. So there you have it, folks. Moving average can also act as a dynamic support and resistance level. One thing about using moving average is that they're always changing, which means that you must pay attention to actual candlesticks and what they actually mean. Pay attention to the moving average on top of strong resistance and support levels, and look at everything, which means that you just can't leave it on your chart and don't have to keep looking back in time to spot potential support and resistance level. You need to know everything, and you need to know that the lines most likely represent a moving average interest. The only problem, of course, is figuring out which moving average to use. So this is everything that you need to know about how to trade moving average, everything basically that you need to know about moving averages. Alright, so gang, I hope this helped. This is your boy Nature, aka Nature. Gang.